All right, all you devils out there, happy Friday. Oh, here we are, 1 o'clock on the 25th. So we're going to take a look at Bitcoin. We're going to take a look at the S&P, maybe some longer-term stuff here. This is, just kind of what I figured we'd start with a smile. I'm going to give you a smile, then I'm going to give you a big frown. And then we'll zero in on something a little bit more practical that might be actionable. So let's start right here. This is kind of silly, but pattern traders wouldn't call it silly. It's just your classic cup and handle, right? Project up, depth of the cup. When I make a trading decision off of that, well, maybe not that by itself, but at least I thought it would be something. At least a pleasant start to our little video journey together here. My goal here is try and keep these shorter. I'm trying to do shorter videos. I have trouble keeping them short. I'm trying to do shorter and more frequently. So that's the plan going forward into the fall. All right, so it's not crazy, right? Now before we get into something a little more practical, as I take you to the frowny face, I'll tell you where this came from. I was doing Wednesday's live stream was kind of a struggle. We had just trading is quite challenging right now across many assets. And we're just with the tail end of the live stream, and a guy posts up a question and says, "What do you think about Bitcoin at 7,000?" And I thought that was kind of a odd thing to say. Why would I be thinking about Bitcoin at 7,000? And so I, rather than just dismiss it, I thought, well, let's take a look there. Where is he coming up with that? Why would he even be proposing that? So now that we've got our happy face, let's go over to frowny face, because this is right. We can't dismiss this entirely, right? So it's tempting to not look at the very, very negative counts, which I think is a mistake. You got to look at them so that if this is what we're in for, at least you've had a look at it and you're prepared for it, or at least, maybe the beginning phases of preparing for it if we start to break through some of these key technical levels. So I thought, okay, where is the 7,000 coming from? And I just went back to the 18 low here, and okay, well, I think most Elliotticians will agree at this point that we've got to recognize that we topped here, completed an impulse. Now, where it is in the broader count remains open to discussion. Excuse me, and this is a valid, you can make this count work. So here, just to kind of button this up right there, you can get a 5 here. This triangle here is not perfect, but there's an A. I think this is the far less likely that this is a B wave here, but boy, bring it down here. There's 100%. If we take the length of the proposed A here from the proposed B, there's 7,050. I said, I'll be damned. That's where he's getting that from. Now, line that up with the set of median lines here, because of course we can't ignore the fact that we have a corner here, right? It's not golden, but there's a corner pocket, which means right here out at this degree, right? 80% odds we get there. Right, we can't be selective about saying, the 80%. Well, no, that's bearish, right? So that can't be right. Let's not dismiss this entirely, right? So we want to be prepared for something that would be extremely bearish, and that would be it. And so before we get okay, all right, sky is falling. With Bitcoin, right? Bitcoin has kind of a superpower, right? That no other asset has. And that would be the halving. Now, this is an article here. Let me take you to this here. This was, many of you probably track this. This is Finbold, and Pantera is making this projection, and they're making it logically. All right, it's not hopium. They're just basing it off of. Now, there's a little bit of. We'll look at it here. They're basing it off of the impact of the halving on price. Now. So we know we have our next halving April of 2024, and the big assumption here is the beginning price. That's the big question mark here. Are we going to start at 35? Well, the premise here, and if you read this article, which I'd encourage you to read, just Google that title. if you haven't read it already. Premise is we'd be starting from 35 before we had that, and you see incrementally the size of the rally, the percentage of the rally off of the low gets progressively smaller. Excuse me here, and here's our last mega, right, from 88 to 68. Same math applied here if we're starting at 35, 147. Now, how are we going to get to 35? Well, the premise would be as we get closer to the halving, you would see bullish enthusiasm on the anticipation that might be yet to come. So before you lean too hard into the bear count here, keep in mind that is a superpower that no other asset has. Oh, well, they're fakers, but nothing like Bitcoin, right? So, okay, here we've had a look at it. We can objectively look at the technical analysis as to how it would get there. Excuse me. Do I think that's going to happen? No, I don't. Could it happen? Of course. Oh, let's see here. Before we get into anything else, I'll tell you what is probably, as we staying out here kind of macro-based, both PA and fundamentally, perhaps the single most important chart for us to take a look at with regards to both the Bitcoin as well as the S&P, which we're going to look at as well. We can call it risk assets, is over here, right? There's the 30-year bond market. Now, that's on a 3-day, and I did that quite deliberately so we can get as much history as possible. Now, clean Elliott count? No. Can it be counted? Yeah. Yeah, we look. It sure looks like we finished with a 5 up here to get to our all-time high. Now, just looking at that, and you see the double bottom here. So, doesn't it occur to you, like, I wonder why it's stopping there, right? Of all the places it could stop, why are we stopping there? Right, so that is a classic setup that many of you already know what I'm about to put on there. Does that surprise anybody? It shouldn't. If you're a member, if you follow any of material that I teach, that should surprise exactly 0 people. Look at that. That's quite the M, right down there, right into that double. Is that potentially sweeping the lows? Well, now of course, if we looked here and tried to apply some Elliott here, it gets a little trickier. How are we counting that? Certainly, that's a 3. We're going to finish down here. I'll throw on the market structure here. You guys all know we work with Sonar Labs here. Recommend them. So I look down here. Throw a couple of demand zones here. That's a chart to keep an eye on, right? So, of course, this is price, right? Price keeps going lower, rates keep going higher, and then you've got real competition for risk assets, right? If you can get, well, it's pushing 5%. If you can get high 4s, risk-free, potentially 5s, right? There's many places doing 5. You take that risk in the market, take that risk in Bitcoin. Maybe, right? Of course, diversification would be the hallmark of any good portfolio, but we got to pay attention over here, because if we break from this low here, now obviously we have a very technical pivot, and I'd encourage you to go through this with your measured move tool. Very technical. That is something I'd have that alerted somehow. Put an alarm on that. We go down here and we break 114.07 and we're going lower. That's going to be good. That's not good for anyone, right? Because the competition for capital will be extreme at that point. All right, so let's not ignore it. Okay, so we've looked at happy face, frowny face. All right, the smartest guys in the room, supposedly. Now let's get over to Bitcoin here. It's a little more practical. All right, so here's an 8-hour. Now I've been watching this, and I'm not so set in my, what do I want to say, right? So I'm quick to adapt if things start changing here. Now, right now, this is my primary, right? This is my primary count. I think it's a safer play to assume that we've got a completed impulse here. Right now, you can get there a couple of different ways, but I think the majority of Elliotticians would come to the same conclusion that this is part of correct. It doesn't look like we would top here, that we went 3, 4, 5. Doesn't have the right, even trying to get an impulse to connect these two, it doesn't quite have the right look, feel, range. None of it looks particularly good. So the premise being that here's the impulse, and now this is all part of the correction, I think is a reasonable one. Now you'll note here what I'm pulling from here. So now if you want to just put on your Elliott hat and just pull, okay, well here it looks like, how would we do it? So W, right? Then we'd have to go A, expand the B. Here, there is an impulse here to give us the X, and then A, 3 in the B, and now we're working on a pretty substantial C relative to the A and the B. I'm holding that as my primary until forced to change it. And the premise being, well, whether you're going to pull here, we're going to pull from this pivot, right? And this just being slop that goes into the X, or you're just going to use dominant to dominant, which is what the algo will do, right? So then now look where our 50 is. Now this is just the anchored VWAP. Right? That's a great tool if you haven't used it. I use it more than I use VWAP, right? So this is a great tool because you can, put it wherever you want. Look how that plays ball pretty nicely there, coming right in here. So we have a demand zone here, as we've looked at that many times. It's actually, it's both on the daily and the 8 hour here. We have a demand zone here. We've tapped this one, we broke it with wick, got a little reaction. So the price action here, God, could you have a better looking 4? Now, right here, let's do a little measuring here as well, right? Always go by with Elliott. We always want to measure, right? So if this is the 1. And that's the 2. Well, here's the, let's see so you can see it in there. I know it gets a little, here, let me take this off so you can see it a little better. So in our labs, market structure indicator. All right, so right now, remember, of course, this is always just probabilities, right? There's no certainty here. So we use these tools, the measurements, these tendencies for waves, we use that to lean a little bit more into the TA, right? Into the analysis. Okay, well, if that's the 1, that's the 2, how do we look for the 3? Well, I mean, I've been teaching this for 5 years, right? The most probable location for the pivot of the 3 is between the 1618 and the 175. Now, granted, we are, no, pardon me, this is arithmetic. Excuse me, pardon me. I was in log, but I'm not. 1, 2, 3, right in the pocket, right? It's even stronger in my mind that I don't have to go to log to get that to fly. Right in the pocket. 3 into the 4. Hard to take a counter position there that's, not forcing something to what you want to see. Now, many people accuse me of that. Uber bull, right? You're always bullish, so you always see what you want to see. I'm aware of that, right? So, I mean, I'm an uber bull, right? Period. Have been since the first buy I made of Bitcoin, right? I try to be mindful of that. So, if I catch myself going, now, am I hitting the hopium pipe here just because I need a toke? That is hard to argue with. Bottom line here, if we come down here and we tag the 23, 24, 25 here, I start buying. Now, I'm not going to put every penny I have into it, but that's another location to be looking to add. Right now, for me, all right, again, I'm fortunate, right? I started buying long ago, so I'm not blowing my own horn, right? I was just lucky about the timing. My basis is so low that there's no need for me to worry about a stop or anything, right? It's just, many of you may be in that position, right, where your basis on the Bitcoin that you hold, right, that this wouldn't be a threat to it. So, but that aside, if you're just looking here for the next trade setup, boy, is that hard to argue with, right? If we come down into that 5, well, you'd have an awfully good looking. In fact, let's see if I can sweeten this even more, right? If that's the 1, and this is going to hold as the 4, so get you right on it. Look where 100% the length of the 1 comes in. You're not going to buy it? So, from a technical perspective, to not buy that, boy, you better have a radically different count. And boy, if you can, I would love to see it. I would love to see a count that you like more than that. God, post it. Post it under the video. I'm dying to see it. Now, I've shared this with all of my guys. Some of my guys don't agree with this. They're going to buy there, but they're not going to go as aggressively as I am, right? Now, not all of them see it the same way, right? It's always it's what makes a market, right? Boy, well, let me just say here. I mean, if you're considering a location to maybe nibble, right? That maybe just a little nibble there. Let's see what kind of reaction we get. Do we get a reaction? If you want to be more conservative, maybe you're a little underwater from wherever your basis is. Okay, and you don't want to take any additional risk there beyond the risk we all take when we enter the market. You might wait for the reaction. What do we get? Do we get a 5 here? Shit, I'm on an 8 hour, right? Do we get a little 5 here that would make you think? Well, at the very least, what would the first place you'd look for is to break the pivot high of the 4. Can I get on the other side of that? Big imbalances here. Excuse me. So you'd have fair value gaps here, right? But we'll put them on in a second, right? If you want to wait, there's your wait. Now, did you miss a lot? Now, of course, we don't know that, right? That could happen, right? It's always the risk when you're waiting. But if this is going to make you too uncomfortable, don't do it. Don't do it or hedge it. I mean, don't do it just because because I'm telling you that's where I'm going to do it. I don't add aggressively often, right? I'm very picky. It's got to really set up beautifully. To me, that is just. I can't imagine a better setup. Well, that's not true. I can imagine a better one, but in Bitcoin, they don't come as any better than that. My opinion, right? My opinion, just that way. So do your own what is it? Do your own research, educational purposes only, blah, 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 right? So you make your own decision there, but I can tell you what my decision is. That's opportunity, right? There's so much confluence there that, I mean, I don't know that I can stack that. Jesus, what else could I put there to stack it, right? I suppose I could, right, if I wanted to, I could take the W from the X, right? I guess I could do it that way. What do I get there? I'm not going to use the B. W from the X. Well, within very short order, I'm at the 1618 at 23.2. Right? It's, again, not quite as precise. Oh, fuck. Can I even get it? Let's see if I take it all the way to the top. Right, so if I use the length of the W projected from the pivot high here, now you might say, well, wait a minute, if you're going to use the W, well, why don't you use the B? Well, now I got the 272,382, right? And then, of course, we nothing says we have to stop at the 50. We could go down. So if this is 1 and we're going into a 2, really anything, I know you can't see in there. I get that, guys. Anything in this pocket here from 23.5 to the 65 here, 21 and change. Let's get this out of here so you can see it. This out of here so you can see it, right? Anything in this pocket. I would be paying attention there. All right, now, of course, right, where's the risk factor? All right, if this breaks and we accelerate, which bonds don't, that would be something has happened, right? Some new data set has come in. The Fed is now going to raise more aggressively. Okay, then if that's the case, oh shit, where do we go here? Then, perhaps you reduce the size. I'm still going to buy it. Period. My order's already waiting over on BitGet, right? I mean, I'm going to buy it. But you make your own decision here, right? So that, to me, right, and no two people have the exact same chart, right? Even my guys, right? My 4 very, very skilled Elliotticians, it's not quite exactly the same, right? No two people have it exactly the same. Work it through on your chart, and what I would suggest you to do is not replicate mine, right? I would just go to a blank chart, see if you come to the same conclusion, right? The whole goal here is not to just copy what I'm doing; it's to take what we're teaching and apply it. Right, that's the whole purpose of TradeDevils University, right? It's not a copy trading service. It's to try and teach you so that you can do this on your own, right? You don't need anyone to guide you. Now, not that there's not value in getting second opinions. I get second opinions from my guys virtually every day because they're good, right? And I don't want to neglect, what they might see that maybe I didn't think of or didn't see, right? And in the S&P, I'll show you, right? The same thing happened to me this morning because that count is brutal. Brutal to get a count that you have any conviction in. All right, so I go to my guides and say, all right, what do you see here? Too good to pass up, in my opinion, right? My opinion. Okay, so there's everything I've got to say there with this being kind of, don't forget about that. That's a juicy target, right? So are we going to go to 7,000? No, anything's possible. Oh, let's go over to the S&P now, right? This one is a biatch. Here, let's come over here. I think I've got it hidden here. All right, so let's, I got two copies. One where this is, I posted this to members that coming into the Jackson Hole speech, and particularly after yesterday, right? We had the huge boom up and then gave it all back plus some the following day, even with the very good earnings from NVIDIA. So the market is nervous, right? We're still very, very much a Fed-driven market, right? So interest rates dominate, right? It affects every corner of the economy. So we can't go, well, fuck the Fed, right? Which Bitcoiners and crypto people, that's the illusion. There is no illusion there, right? Capital flows where it's treated best. And if people can get 5% without risk, capital is going to flow there. It's already flowing there. All right, so this is a bear of a count, right? For an Elliottian, this is, nobody has a lot of certainty as to where we are in this count, because this fucker is really brutal here to get a clean count on. Oh, I use this ellipse tool right here. This is brutal. What is that? Anybody have great conviction in what we have here? I'm going to guess not. And if you do, you're smoking your own opium pipe. You're making a guesstimate there. Very difficult. Now, even back here, right? This is very challenging here. I've changed this a couple of times. The impulse into the one here, I do think is solid. Now the question is, do we go WXY and then launch, or is it 1 2 1 2? Now I'm equally bullish of the S&P, barring a dramatic break here, right? That will pull stocks down without any question. Oh shit! Now I lost my place here. Let's come over here. Essentially, what we're doing is we're getting another leg here. If it's 1 2, and then we're in the 3, which would suggest that we got a 4 to complete a 3. Now that's very, very bullish, right? Now, is the AI revolution? So what would do that, right? I mean, I've heard many people much smarter than I propose that the AI revolution is the fourth industrial revolution, right? It's or the fourth revolution of technology, however we're going to describe it, and that it will change virtually everything. So the players right now, beyond just the magnificent 7 that dominate the S&P and the Nasdaq, we got to get a broader based rally than that, and maybe AI enables enough companies to get productivity enhancement and employee enhancement, or lower cost because fewer employees, however we slice and dice it to rationalize it. I remain a bull of U.S. assets, barring, right, heavy emphasis, barring a big drop here where rates are going dramatically higher. Nobody wants that. The Fed doesn't want that. The U.S. government, regardless of who's in power, doesn't want that. Nobody wants this, but they're being forced to do it. Right? COVID forced the hands, right? So, boy, you can make an argument here that this is swing, retrace, but is this I'll tell you what it's not is what you'd hope, right? Right? So we could be very clear. Oh, well, of course it's done. Double bottom in the golden zone. Oh, of course it's done. Right, when rates aren't going any higher, we've got rates have peaked at that double bottom in the golden zone. I'll tell you what, it would be just an incredibly sexy story to tell, right? If we come out of here, rates go back. Now, that could take 2-3 years to come dig out of this hole and come back to these levels. That could be 10 years in the making. I mean, it was 20 years to get here, right, from the low. That's roughly 20 years. Don't ignore this. Right, that will make a difference. Okay, let's get back over here. All right, let's see if we can make sense of this, and then I'm going to get out of here. Okay. Well, let's dig in here. I'm on a 2-hour. Right now, I'm using a secondary pivot. I'm using what I can find. Right, it was often what we do. Right, you get which what did they use? Right, did they use this? Nope, they didn't use this. Use this? Nope, they didn't use this. That's what the algo is going to do. Right, it'll just go back. If they break, it just goes back and pivot, back and pivot, back and pivot. That's why you have to check all of them. Right, we're not in the clear until you break the swing, the dominant range. Right, from dominant high to dominant low. We're not in the clear till we get over that. Right, then it's game on. Until then. Boy, is this a brutal, right? So we say here, oh, front run on the 50, maybe, right? Secondary pivot, not as impactful because, you know, why that pivot? Did they use it? Well, they might have. Is it little front run? Maybe. Maybe, right? See, you don't have as much conviction. One, the location of the pivot, and two, now if it's a perfect tag, then we know they used it. Right now, look where we go though with that. Right, if I take that off, if this is it, 1, 2, again, kind of a little front running here, right? Well, this is clear liquidity grab, right? I've got the little dollar signs there, so we know what happened there, right? Breakout traders got bent over, as they almost always do. Not always, just the vast majority of the time. Okay, right, just for that very reason, right, algos will take advantage of that. Okay, so this, I'm just kind of pulling this over going, all right, well, where the heck are we going? Right, so this consolidation here, just pulling it over here, well, can we get a count on this? Well, that's what I was saying earlier, right? I was going, what the fuck? Went to one of my senseis who gave me his count, which I think does make sense. So let me see if I can get this on here. I'm trying to get better with these things. All right. Oh, shit. I have it here, don't I? Where are my groups? Oh, hang on. I'll find it. Hang on a second. All right. I knew I had it in here. Okay, so let me just zoom in here so we can get a better look at this. Well, first here, let's note here from our corner pocket down here. Right, corner pocket, right? We know we have 80% odds. Let's just acknowledge we got our 80% right there. Boom, right? Now, can't get there, rolls over. All right, so here, let me pull this back for a sec and dig in there, right? So how do we get out of here? Well, this does look like, and this came from PKS Event, who's one of my lead senseis. 1, 2, 3, 4, 5, right? So here's the overlap. So you have to do it as a diag, right? If fly, you'd have to do the ABC here. Is it the perfect? Of course not, right? You're making do with what's there. So then you'd have to go ABC into this, and I think I do have some of this. Oh, Jesus, here I have trouble finding them. My groups. Okay, so let's do group 1. Okay, so if this is one thought here is, and this is looking for a low down here of the idea that we could still be putting in a 4. Okay, well, it's either a 1 or an A. You'd have to do A, B, C into the B here. Now, can we get a C here? Boy, it was very technical on the way down. It's a little bit of a guesstimate as to where this is the 4, 5, right? So you're working backwards. 4, 3, 2, 1. A little tricky to make it fly. I will admit here, but sometimes with Elliott, you're just making do with what's there here. So here's one thing I know: that is not corrective, right? Something is finishing here. Right? I don't have to label every pivot there. Swing, retrace. I mean, it's perfect market structure. Swing, retrace, right? Break of structure, retrace. Break of structure, retrace. Break of structure, change of character, right? Deeper retracement, right? It's all, I mean, it's literally by the market structure playbook. So we come back for the retrace here. If this is if it's a 1, right? The overlap here is telling. If it's an A, B, C, well, we don't really care about the overlap per se. But that would be a bit shallow here to go A, B, C into the X, right? If this from the pivot high, I don't think we've got 30. We don't quite make 50. I bring that in. Right, so it's not like, oh my God, that couldn't possibly be an X, right? It could be. But then how are we going to finish this, right? It does look like I got 5 here. This, right, Fed speak, right? It's typical, right? It's going to distort counts. You're almost better to just go to a line chart and say, okay, 5 looks like 5, 3. Well, if this is an X, we're looking for an ABC. Now, if I pull this back a little bit, let's go back to our candles. Oh, let's go to an 8. Pull this back here. We've got this is another. I've just added the 150 to this. Here, this being the 100, this being 150. All right, a little wiki on the edge here. Let's hide this. Oh fuck! Come here. Let me get that. Let's hide that. Just take it off a little bit here, and we can dig in a little bit more. WX. Well, we got to pay close attention to this pivot here. Oh shit, I've got everything off here. Well, it doesn't matter, right? So, because what we're focused on here is from this pivot low. If, did I say if this is 1, 2, it's either A, B, C, or 1, 2, 3, right? If it's 1, 2, and we've got a 3 here, which you can make a case for. It gets a little funky in here, but you can make a case for it that we've got a 3. Well, if this would be as far as we'd want to see that 4 go, right? 38 to 50. We don't want another golden zone here. Now, it's not that we couldn't pivot down there, but then you're starting to get crazy bullish, right? Now you're into, well, to be a little more conservative, you could do it this way. You could do 1, 2, and then we've got a completed impulse here. You could do 1, 2, right? Now we're, again, super bullish. Even more bullish would be 1, 2, 1, 2, 1, 2, right? 1, 2, 1, 2, 1, 2, right? And part of that comes from if this is another 1, 2, and this is the internal. Well, what did we do here, right? Well, there's our. Just make sure I'm in algo or in arithmetic. Right, we went a little bit past the 1618175. Right, we know that the median line tagged right here. Right, so if I put that set of median lines back on, right, where the fuck we are, right here. Right, so we know we have very strong technicals here that got there. Right, and that we just roll over. All right, so let's take that one off. Oh shit. So good contender for a 3. But we don't want it to break. So here's your 42.39. If we're breaking that low, then I take you back here, then we're probably breaking that low. All right, so as that sits, this is tricky, right? I've got a bunch of option trades on here that are making me a little uncomfortable because we have so much volatility, right? I'm trying to sell the premium. But we're swinging, 100 point swings, 80 point swings is now an average day, right? It used to be 20 was up. Back when I was a broker, 20 points in the S&P was like, holy shit, you see the S&P today? 20 points. Now that's the morning, that's the opening range. This is tricky here. I would be cautious about overreading this, right? I'm looking for more information, right? Again, you'll hear me say many, many times, Elliott is a snapshot in time, and we don't have all the information. We don't have enough to really say, oh, well, of course, WXY. We don't have it yet. We're coming out of August, summer season, and we get through Labor Day. Maybe some of this will start to clear up a little bit. We'll get some more jobs data. I'm cautious up here, right? Cautiously optimistic, right? I do still think we can objectively say we have a rational explanation for a low down here. Now, we have to do it through a WXY, and we've been through that many, many times, but we have a great looking fifth that finishes, right? And then we start this journey on the way up here. Certainly you could look at this as an ABC, which would imply much lower prices if we're going to go A, B, or fuck, ABC could be an X, right? If this could be a WXY XZ, right? There could be another big move coming down here. And our interpretation here that perhaps it's WXY. Well, this could be 1, 2, 3, 4, 5 of A before B before C, and we're challenging these lows. So don't just ignore that and blow it off as like, well, that will never happen. That's kind of like Bitcoin at 7,000. Well, that'll never happen, right? Let's not put that out into the universe. You got to watch this carefully here. This is tricky, right? Because as we were just talking about earlier, you essentially have 7 stocks responsible for the majority of all of this, right? All of this. Now, they start to peel back a little bit. Things could get dicey, right? It's not clear sailing. When is it? Oh, fuck, it's never clear sailing, right? But we're at extremes, right? We're pushing, an all-time high here, right? We didn't get it. Fed fastest rate hike cycle in 20 plus years, and they're just today telling us that they're not done. So what is the market being forward looking? Yeah, look at the market's rallying today, being forward looking. Here's that and goes, oh, they're almost done, right? The market will forever spin it positively if they can, right? If it can be spun to be positive, it will be, right? Market all over the ball, you're trying to hold it underwater, right? You better have a serious weight on it. Now, again, I take you back to what's the anchor that can pull it down? That's it. That's the only thing I can think of other than the black swan, which takes everything down. So I'd approach with caution here. Maybe individual equities probably better, but being mindful that if this goes, everything goes with it. So I don't know that this is the best time to be doing a lot of aggressive trading with what's going on with just across the board. We're in crypto, government's doing everything they can to fuck with it. And government raising rates, right? Doing everything they can to keep a lid on risk assets. It's a tenuous time to be aggressively trading. I think this is we'll get some clarity here. If this low gets taken here and we end up here, we'll get, whether we get something along these, that we take this low and we're pushing now some of you can see the obvious structure down here. We start to push some of this. You don't want to be on the wrong side of that. If anything, maybe you're nibbling a little bit here, but there's nothing wrong with getting on the short side. All right, guys. Oh shit, there's 36. I was trying to do it in under 30. Right. That's all I got for today, and I do think this is all going to start to look better come September. Well, maybe not necessarily better, depending on your bias, but I think more clarity. Right. We'll get a little bit more information. We'll get through the summer doldrums on the other side of Labor Day, at least here for the U.S. markets. Volume will start to come back. I think a little more clarity is right around the corner. Okay, guys, that's all I've got. Just a reminder, you can always join us for free. Our links are all below, right? God, I've been doing this for so long. You know where to find me. Or join us. You can always join us for free, right? And then we've changed our pricing around. I've got, I think, 4 days at the end of August where my wife's going to be out of town, hoping to finish up some new course content. So lots more to come from us. Hope you'll stick around to see it all as we roll some new things out. And with that, I'll wish you guys a good weekend. We'll catch you next week.